Okay, with number 3. Number 3, I'm asking for the net operating loss from a single taxpayer that has the following information. The single taxpayer has a part-time job that she makes $45,000, corporate dividends of $2,150, but from her business is $175,000 business revenue, business expenses $250,000, itemized deductions $12,150, and the facts for 2015 standard deduction was $6,300, exemption was $4,000. So what are the steps in figuring out net operating loss?
First, net loss.
First, we have to figure out the net loss from the business. So that's step number 1. Net loss from, I'm going to say biz. Wait, biz. So we got business income of $175,000, business expenses of $250,000. So what's the net business loss?
$75,000.
$75,000. What is step number 2?
AGA?
Yeah, step number 2 is to determine your adjusted gross income. Actually, we can combine step number 2 and step number 3. So step number 2 is determine adjusted gross income and determine what else? We determine adjusted gross income. And what else do we determine? Taxable income.
Yeah, that's.
So we have to figure out adjusted gross income, the AGI, and then we figure out the taxable income. So adjusted gross income, what do we add? We
salary.
The non-business income.
Well, yeah, the non-business income, but before the non-business income, we're going to add the salary. Salary is considered active income.
Dividends?
And then dividends.
That's your non-business income.
That's correct. That is your non-business income. That's actually good that you pointed that out. That is non-business income. That's going to be relevant once we figure out the net operating loss computation.
So it's $27,850.
Yeah, so the adjusted gross income is $27,850.
Yeah.
Yes.
All right, then we're going to do the taxable income. The taxable income, the standard deduction is $6,300, itemized deduction $12,150. What is the general rule for that? We're going to take the greater of the two. So again, from adjusted gross income, we deduct standard deduction or itemized deduction, the greater of those two numbers. And we also subtract exemptions. So we're going to subtract itemized deductions of
$12,150.
Yeah, itemized deductions of $12,150, right?
Yeah.
We're also going to subtract what else?
Exemptions?
Exemptions,
Which is $4,000.
which is $4,000. Now we can figure out the taxable income.
Which is 44,000.
Yeah, $44,000. So now what do? We figured out the taxable income. So we did step number 1, determine the net loss from the business. Step number 2, determine adjusted gross income. And step number 3, I also did in one big step, determine taxable income. And step number 4, or step number 3, depending on how you look at it. Step number 4, which will be your next step, determine the net operating loss. So I'm going to do my net operating loss computation over here. NOL computation. So we start out with taxable income. Taxable income should be negative based on your previous computation. We're going to add back what? What's the first?
Itemized deduction.
Itemized deduction.
Before itemized
minus
deduction.
non-business
Exemption.
income.
Exemptions.
Okay, that works.
So yeah, we add exemptions first. We add exemptions first. But I heard, a couple of people say we add back non-business expenses over non-business income. That's actually your next step. Your next step, we're going to add back the non-business deductions in excess of non-business income. Again, I'm assuming the itemized deductions do not have any business expenses. So my non-business deductions would be itemized deductions, right?
Right.
$12,150. My non-business income would be what?
The dividends.
The dividends. Remember, that's active income. Dividends, that's portfolio income. So we're gonna add back the difference between the itemized deduction
10,000.
and the non-business income. So we're gonna add back 10,000. So that equals
Easy money, easy money.
net operating loss of 30,000, right? Okay, that's how you do the net operating loss computation. Refresh my memory, what is the rule regarding net operating loss in terms of carryover rules?
You can carry over.
Carry forward 20.
You're gonna carry it forward 20 years.
And carry
or
back
2
to.
years.
And then
Well, you have to carry it back 2 years first, to the earliest year first, and then what do? You carry it forward 20 years. However, there is an election. What's the election? How does that work?
You can elect not to carry it back.
Exactly. You can
And just carry
elect
it
to forego
forward.
the carry back and just carry it forward up to 20 years. So it's up to 20 years.